Good morning, everybody. Hey, welcome to Tuesday. It is December 6th. Yesterday, not a great day on Wall Street. We'll talk about that and more when Dave joins us just a few seconds. Before we do that, though, let's not forget that there's a lot of things in this world that you and I cannot control. We can't control what happens over in Russia, Ukraine, or even what happens in Washington, D.C. for a great extent. However, you can control how much risk you have in your current portfolio. But you need to know what that risk is before you know whether it's too much, not enough. Give us a call at 863-382-0037 to walk through our core retirement design analysis. Make sure that you're on the right path to the retirement you always dreamed of. Again, that number is 863-382-0037. Give us a call now. Schedule your call. Dave's coming up next.
Light FM. Lionel Richie is there. Morning Dave is here. We're at 8:39 now. That's 21 before 9. And that's a good time to check in and see what's going on Wall Street and see what's happening to your IRA and 401k this morning, because this kind of affects all of us, even if you've got it in an old stock. Your money's getting worse and worse if you're just keeping it an old stock because inflation stinks. Let's see what's going on. Phillip Statler from Statler Financial Services is on the phone. Phillip, good morning. How are you today?
Good morning, David. Doing well today. It is Tuesday, and yesterday, though, I got to say, was not a great day on Wall Street, and hopefully, maybe we can put something a little better together today.
I sure hope so. One of my tip sheets was calling it a major sell-off. I'm not sure I'd characterize it on that compared to what we've had in the last couple of years, but it was definitely an El Stinko day. The Dow went down by 483 points. That's a full 1.4%. NASDAQ was the worst of the bunch, down 222 points, down 1.9%, and the S&P kind of split the difference, falling 73, down 1.79%. I was asking you before we went on the air whether you thought it was just resetting based upon the expectations that the 0.5% interest rate increase might not happen next week, or whether they noticed that was almost panic time, that once every 2-year party we have in Congress where we argue about the debt ceiling and scare the pants out of investors. You're thinking it's just a repricing for the moment, huh?
I think it is. I mean, I think everybody's now feeling that, the good news, bad news deal, that we got more good news than we anticipated, which means bad news is coming from the Federal Reserve later this month. And so I really think that's probably the most of it.
I was honestly kind of hoping it was the beginning of the volatility over the debt crisis, because that becomes a manufactured crisis every doggone year. The mainstream media started turning toward panic building on that yesterday, and it's toward the top of all of my tip sheets this morning. And frankly, I'd like to get that little act out of the way as soon as humanly possible, because you and I have always shook our head and rolled our eyes over that, because they always do it. Nobody wants our credit to go to heck.
Well, that's right. I mean, we know ultimately the stalemate will end. They'll raise the debt ceiling because they have to keep the United States in good graces as far as their credit rating. And so we know that's going to happen. But, they do play this chicken game every couple of years. And talking about the deficit, Dave, did you see the new deficit number came out yesterday or this morning? And
how bad is it?
Well, not as bad as they had analysts had expected, because they expected it to jump to $80 billion, up from $73.3 billion. But it didn't. It came in at like $76 billion. I think it's a 5.4% increase, I think is what the number was.
Ah, good news. We're only spending money like seriously drunken sailors instead of completely stoned out, whacked out sailors.
I guess that's the way to look at it there, Dave.
That's the best I can do with the process. But the other macro thing that came out this morning is exports fell in October, but imports rose, and we're importing more than we're exporting. So the economy is still showing some activity, but we can't seem to sell our junk overseas, can we?
No, we can't. Factory orders are up though as well. So, I mean, we got there's again some good news there. How the Fed interprets that good news, that's the big question. I think those may be the things that are weighing on the markets even yesterday.
Yeah, and that's the part that always hits it. We talk about good news. I mean, our imports are rising. That means more retail activity. Exports are falling. Yeah, we want them to improve, but I mean, we're in relatively good shape economically, and that's exactly the kind of news we don't want to see. Let's see here, 7 days ahead now of a Federal Reserve decision to raise interest rates, and how much. Other stuff going on. Let's see here. Job cuts. They want to level off the employment market. PepsiCo's contributed to that because the Pepsi people are going to lay off a bunch of people at their home offices. And something I got kind of a giggle out of. Jamie Dimon, the big banker guy, he was doing a rubber chicken interview the other day and said, gosh, he expects a recession next year. Wonder what his first clue was.
Well, he's blaming it on inflation, right? Eroding consumer wealth. Who would have thought, right? Inflation cause a recession.
I was kind of wondering where he got that clue all of a sudden. I mean, I think he's last in line to say we might have a recession next year. Kind of threw me for a little bit of a loop. I mean, that was just, I was just waiting for him to decide whether or not the economy had a chance of taking a tumble.
Well, we definitely, now we know what side of the fence he's on now for sure.
Yeah.
And I think he's not the only one. I read somebody else's little blurb and feels like that, we're looking for a recession next year as well. I don't know. We haven't talked about Bitcoin in a little while, Dave, but I find this interesting. I had a headline. Bitcoin could plunge 70% down to $5,000.
I saw that same thing.
Yeah. So I found that interesting that that would be a huge decline from the 60-some thousand it was last year to down to $5,000.
Yeah, if you bought it at 60,000 a year or so ago, you're probably not very happy this morning because my delayed quote has it at like 17,000 this morning, which, you've only lost 75% of your money since you bought it.
Yeah, exactly. And they're citing some things that I think are relevant that people need to be, especially given the whole, FTX deal. There are other crypto exchanges, they say, that could very well end up going belly up, and that will put more and more pressure on the crypto markets.
I kind of gather, and I'm not lucid on the Bitcoin market, but I gather from what I've been reading that a bunch of the other exchanges that trade, in retail with people buying little bits and pieces of Bitcoins, a lot of them are using that FTX exchange being, for lack of a better term, a clearinghouse. So this is, on the small portion of the world that is Bitcoin, this is starting to sound a little bit like the Lehman Brothers thing back in '08. I mean, it's not anything resembling that scope, but, one thing can become a domino effect in that entire industry. So that $5,000 number is not outside the range of reality, is it?
No, it's really not, because remember when it was like, in recent memory, which is still not that far back, $800, $600 for a Bitcoin. So, and where is it today?
Yeah, 17. If you bought it at $600, 17,000 sounds like a bargain. I just feel sorry for the ones that got on too late. You had some good news from the high-tech industry. We're going to get a new semiconductor plant, are we?
Well, we're going to get one in Arizona by the Taiwan Semiconductor Manufacturing Group out of Taiwan. But now they've agreed to put a second one in Arizona. So that's going to be two. And that doesn't include the other one I forget who's putting it in there, but there's another one going in Arizona too. So I guess maybe the dry weather makes it good for this type of manufacturing because everybody seems to be focusing there. And so the Arizonians are really happy because they've had a really rough go of it since COVID because they're one of those states that kind of shut down and still haven't fully recovered from all that.
Understood. And it's good news for the overall economy because one of the challenges we had during the supply chain was the fact that we don't make any of those doggone chips in the domestic supply chain. So we're kind of a victim of those floating warehouses outside the harbors in California that kind of was El Stinko there for quite some time. I'm not sure what the count is. Nobody's talked about that recently, but I'm betting there's still a logjam outside of Los Angeles.
I wouldn't be surprised either. I mean, just trying to get the boats in.
Yeah, I can't clear up anything that much. Watching interest rates, something else you and I hadn't mentioned for a couple of days, but it bears note. As of this morning on my delayed quotes, the 30-year Treasury note and the 2-year Treasury note are rapidly approaching 90 basis point difference between the two in the wrong direction, 4.4 odd percent for the 2-year notes and 3.55 odd percent for the 30-year notes. I know you probably got more current numbers than I do, but we're rapidly approaching 90 basis points between the two.
We are, and that's not good news for that either. So we continue to watch to see, again, another indication of recessionary times. So just the way it, we got a lot of things up in the air right now, Dave, that we have to continue to watch, and the Federal Reserve coming out next week, that'll be a big part of it.
Absolutely.
We do have a few earnings though,
Yep.
as we kind of tailing off here. Not necessarily all. Well, I got a couple household names anyway, but one of them that's not probably a household name is GitLab, and they had better than expected quarter results. They lost less than was expected, and their sales were more than expected. So good news for them, and they gave an upbeat outlook for the year. They're up 14.25% this morning.
Whoa.
Yeah.
Got a friend that was looking for tips the other day. There's one for you.
That's right. You just got to know ahead of time, right?
Yeah.
We had AutoZone. They beat on top and bottom line as well. They are they one thing that same store sales had a much larger increase than expected. So that was good news for AutoZone. They're a high price stock. So right now they're trading at $2,532 a share. That's up about 0.2% from where it closed yesterday.
When your base price is that much, 0.2% is a fair chunk of dollars, isn't it?
It is. The last one I have for you is Signet Jewelers. That's K Jewelers, Jared Jewelers, that whole group of jewelry stores.
Good
And
bellwether for this time of year.
They had a really good quarter. They were expected to make 31 cents a share. They made 74 cents a share. Revenue was better than expected. Same store dollars, though, declined about 7.6%. Which was in line, I guess, with what everybody expected. So not, I mean, it doesn't sound good, but it's what everybody expected. Signet Jewelers up 7.1% this morning.
That's good news. Glad to see them on a big winner list, especially going into the retail holiday shopping season. Resetting the table, off day yesterday. Matter of fact, pretty pronounced off day yesterday. 45 minutes before we start trading this morning. What are we looking at so far?
So right now it's a mixed bag, keeps getting more mixed. So we got the Dow down about $57 right now, which is a little less than 0.2%. S&P 500 just went down to $3, less than 0.1%. NASDAQ 100 is up $7, which is obviously less than 0.1%. The other side of the coin, we got silver up about 0.6%, but still below $23 an ounce. And then we got gold up 0.5%. Yesterday, it did drop down below $1,800 to $1,790 an ounce. And then crude oil, you and I were talking about crude oil. It had a drastic day yesterday. It dropped from like $83 a barrel to like $77 a barrel within hours, and actually closed and somewhere down around $77 to $76 a barrel. Well, right now it's going to open at $75.72. That's down another 1.6%. So I looked, I can't find any reasoning behind it, but man, maybe we'll see some gas prices start to get below $3.
That would be a nice thought. Yeah, none of us could figure out why, but it took another big dive about midway through the overnight futures as well. Overseas markets, mixed bag in the Asian rim. Looks like China and Hong Kong have settled down a little bit. No major moves either direction, and most of Europe right now is trading fractionally lower halfway through their day. Stabilizing one's retirement and actually having a plan to be able to quit working someday, that sounds like the American dream. Phillip, how do I find you to ensure mine?
Then give us a call at 863-382-0037 to schedule their core retirement design analysis, where we'll help them design the retirement they always dreamed of. Again, that number is 863-382-0037. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning about the same time. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Thank you. Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope your week's going well. Hope you'll join us again tomorrow, same time, same place. Until then, have a great day.